So what do we do? Might go a little bit quicker on this so we can actually save some time for questions. But as Brian mentioned, the first thing in terms of day-to-day operations, we both spend a fair amount of time doing is sourcing. What does that mean? It means finding interesting and new companies that we may want to invest in. So I talk to probably 10 to 15 to 20 CEOs a week. Sometimes we talk to more, sometimes less on average. And they're CEOs of new companies, companies maybe we've never talked to before, companies that we've talked to in the past that are just keeping up to date with. How's the company doing? Are you going to raise some capital? Are you thinking about it? Also calls with investment bankers. So for those of you that may not know exactly what investment banking is, I'm going to do a gross simplification of it. But think of the house example again. When you want to sell your house, you hire a real estate agent. They're a broker. They represent a buyer or a seller in a transaction. If you want to buy a house, maybe you will also hire a real estate agent to go find you a house. That's what investment banking is. They will go out and help people, individuals, sell their house, sell their company. Usually I think it's the easiest way to think about it in terms of houses because everyone knows houses. But that's what investment bankers do. So we talk to them. They may say, hey, we have 5 different houses back here that we're selling. Are you interested in taking a look? And then we'll work with them in order to actually look at the company and so on and so forth. So market research as well. So we may go out and make an investment in an online advertising company. And maybe it focuses on a specific niche. Maybe it focuses on cars and doing advertising for cars. We'll go out and evaluate the car industry to see if it makes sense and people want the advertising or not. The second part is deal management. And so this is building financial models. This is coming up with those projections about how we think the company will perform. We underwrite the plan in order to say what you actually think as an investor this company will do in terms of how it will grow in terms of revenue and size, as well as profitability and so on and so forth. That's usually a financial model using Excel. Some of you may have done that already. That's what we do on a daily basis. Due diligence. Do you want to talk about due diligence a little bit more? Or want me to keep going?
You can keep going.
All right, due diligence. This is where if we're actually looking at a company and we want to invest, we may come to a preliminary agreement that says, we want to go and do a bunch more work, so we may hire accountants, we may hire outside people to do market research for us. We're going to interview the management team. Diligence is the process by which you verify your thesis or hope to verify it. So you come up with it. We think this company can go from $50 million to $100 million in 10 years. And now we're going to go do diligence. We're going to research that thesis much more diligently to go out and actually execute against that thesis and hire people to do that.
I'll add just 1 or 2 things here. I think due diligence, going back to the, you own a private company, you don't have to report to anybody, you've kind of been doing this for a long time, you want to sell your business. Due diligence for us is sort of lie detection. So we go in and we say we'd like to buy your company. Guy says, great, it's going to triple next year, and here's why. I'm going to sell $1 gazillion of business to customer 1, and $2 gazillion to number 2, and $3 gazillion to number 3. We say, really? Are they really going to buy? 100%. And so that seller would want us to write them a check based on that. What we will say is, absolutely, we're happy to write you the check. We're just going to call those customers first and just make sure that's what they're going to do. And so due diligence is the broad term for, basically figuring out where the, maybe not a lot, there was an exaggeration or a fib. Sometimes there's outright fraud.
Yeah.
And so all of that, is what we do to make sure that we're protecting our investment. That's due diligence. I may just run through this pretty quickly.
Good.
We create a lot of documents. This is mostly legal, so when you buy or sell something for millions of dollars, people get worried about all kinds of things. And so we pay lawyers very well. If you're thinking about being a lawyer, it's a good line of work. The portfolio maintenance happens post-transaction. And so we will acquire a company or invest in a company. And our job is not just to provide money, it's also to provide guidance. We've done this now a lot of different times. And some of these businesses have been run by one person for a very long time. And they haven't had the benefit of talking to people who, have seen this kind of business a number of other times. And so we'll sit on the board, we'll go to meetings, we'll make sure that they report to us in a consistent way, and then we will continually look for, potential buyers of the business.